Hi everyone. Welcome to today's session titled Investing in the Next Big Portfolio Ideas Using Small Cases. So before we proceed with this particular session, a couple of interesting things that I'd like to point out, which we'll be covering in this particular webinar that we are hosting today. What we're going to do is basically take a look at different themes that are playing out in the Indian markets, and how we'll also try to explore how India's economy as a whole is expected to do. And as a result of this, what would be the effect of these kind of themes that are playing out on the Indian markets, and how we can go ahead and partake or participate in these kind of thematic plays that are going to happen in the Indian stock markets. So this is what the entire session is going to be centered around. And we will also talk about, and we will also showcase some of these small cases or portfolios that are centered around the next big themes that are going to play out in the Indian markets. And we'll also be discussing these portfolios' performances, its composition, the philosophy behind why it has been designed, and we'll also discuss more if need be about each one of these portfolios. So the first thing that we will try to understand before we get into the nuances of how the portfolios have been designed and what the expected performance is going to be and so on. In this session, the first focus is going to be on how India's economy as a whole is expected to perform in the long run. And we will be basing out our assumptions on this particular topic going forward. So let us start the session. Okay. So like I was saying, we'll be focusing on investing in the next big portfolio ideas using small cases in this particular session. So taking a quick glance at India's growth trajectory and how it is expected to play out, maybe in the next 15 years, next 20 years, next 30 years, the first thing that we will be taking a look at is one of the reports which speak about or which basically showcases how India's GDP growth is poised to expand going forward. So if we take a look at what is happening with India or India's GDP growth, we will see that India is only second, coming next to Dominica, which is not a very important economy coming to the world affairs. So when we take a look at India, among the major economies that are present today, India stands at number one when it comes to the GDP growth that is happening. I'm talking about the larger economies here. It could be India, it could be China, it could be any other economy which is developing in the developing phase right now. So what does it mean for us as investors, and what does it mean for the Indian economy as a whole? Where exactly is this going to play out? So it could play out naturally in the automotive sector. It could play out in the banking sector. It could maybe play out in the pharma sector and so on. But are there any specific trends or any specific themes that need to be focused more? Because this is India that we are talking about, a country made up of largely of, I would say, middle income class earners. So it could be low middle income, medium middle income, high middle income, and so on. But where is it largely going to be centered around? That is what is going to be the focus of this particular session. So by understanding this particular data, let us try to move forward and try to understand how India's middle income population is expected to grow. So why is the center of, or why are we particularly talking about the middle income class growth story in India? That is something that we will try to understand, not orally, but with data. Because ultimately data is going to translate into how the consumption story is going to play out, and eventually how the markets will also play out as a result of it. So coming to understanding the data aspect of it. So what this World Economic Forecast is basically showing you on the screen right now is the number of households. On the top, what you can see is the number of households in India. So if we take a look at 2005, this particular, we can see that there are 219 million households in India. By 2018, the data has jumped to 293 million households. And by 2030, the forecast is for 386 million households. Now, let us try to understand what this data is showing us. So if we take a look at 2005 and only 2005, you'll see that the lower middle income class or the lower income, the lower income population category in India, you will see that 151 million households out of 219 million households, which is about 70% of the households, were categorized as low income population. Now, what does low income population mean? So, as you can see over here, if the household income is less than 2.5 lakhs, the entire household income as such, it could include both the partners earning, it could include just one earning member in the family. But whatever it is, if the entire household income is less than 2.5 lakhs per year, then it is considered as a low income household. Similarly, you can also see something called lower middle income household here. So what does lower middle income household mean? Any family or any household which earns between 2.5 to 5.5 lakhs is categorized as lower middle income household. So in 2005, that number was approximately 23%. And moving ahead, if we take a look at the upper middle income population in India, at that, let us first define what an upper middle income population is. Any household which earns between 5.5 lakh to 27 lakh rupees. So I know that it's a wide range, but that is the range that is considered to be belonging to the upper middle income class population. So that population accounted only for 7% of the Indian household population. And when we take a look at high is not something that we are going to really focus on, but high can be categorized as just 1% of the Indian household population. So that is anything above 27 lakhs. So if we take a look at just this data alone, we know in one single glance that almost the entire population, which is 70% of India's population, accounted for lower household income population. And similarly, if we include lower middle income class population in that, then the number simply jumps up to about 92%. So there is a reason why this particular session is being centered around this particular data, because we are now going to see how the transition has happened from there onwards. So if we take a look at 2018 and how 2018 had played out, so one thing that we can see is that the lower income population in India, household population, from 69% of the population, or from approximately 70% of the population, the overall numbers have declined to being just 43%, which is quite a significant amount of growth. And where has this population headed to? So this population has predominantly split both ways into lower middle income population and upper middle income population. So if we take a look at the total number of households which have been categorized from 2005 to 2018, it was hardly a matter of 13 years. And just in those 13 years, the upper middle income class population, which accounted for 16 million households, has boomed in a single shot to 61 million households. And if you take a look at the lower middle income class population, again, from about 51 million, it has doubled to approximately 97 million. And we are noticing this trajectory continuing. So the high income population has not changed much. Of course, if you look at it from a percentage point of view, it would have jumped 300 or more percent or so. But originally speaking, it still accounts for a very minute part of the overall number of households in India. So that is a data that we need not look at right now. Again, moving towards how the 2030 forecast is going to look like. So if we take a look at 2030, the World Economic Forum forecast states that the lower income population in India is going to decline to just about 15%, which is 1.5. So this is a very stark difference that is happening from the 2005 era data up until the 2030 data. And it's just a 25 years difference between 2005 and 2030, which means that the population boom that is happening and the population that is moving into being categorized as either upper middle income class population or lower middle income class population is quite high. And this tells us one thing. So by 2030, by the year 2030, which is just less than a decade away from today, what we know for sure is that about 80% of the population in India, instead of being categorized as lower income population, is now going to be categorized as higher income population, so middle income population. So this middle income can both account for lower middle income class earners as well as higher middle income class earners, but nevertheless, that is the category that they're going to fall into. And this is where we are going to basically try to figure out if there are opportunities for us as investors to partake in this particular growth story. So now, I'm sorry. So now, let us also take a look at this graph in for a simple pictorial understanding of how the dynamics are changing. So if you look at 2005, and if you take a look at the middle income class population in India, it was just about 67 million, which is right about here. And if you take a look at how the population is going to boom by the year 2030, then you will notice how the boom is actually happening from a graph point of view. And if you also notice the blue graph, which is showing the lower income population in India, you are able to notice that the lower income population is going through a severe decline. And going forward, it is only going to continue. Both the trends are going to continue going forward. So now, let us try to understand some important details about how the middle income class growth story is playing out in India. So, to give you some perspective, India is expected to add 45 crore people to the middle income class category in the next 15 years. And the growth is expected to add a population which has more discretionary income. What do we mean by discretionary income? We mean additional income apart from the income that is required to run basic necessities of the household. So first we have our basic necessities income, post which there is surplus income or discretionary income, which we can spend on other items that were not necessarily of importance, but which had some significance in our lives. For example, what could those items be, or what could the extra surplus income that is going to be a part of the population going to be spent on? So if we take a look at that, we know that with data, we know that these items are going to be luxury items such as skincare products. It could be branded clothes. It could be spending on entertainment and so on. So moving forward, it's the same report. So according to this report, around 80% of the consumption going forward, it could be any consumption. It could be consumption related to goods. It could be consumption related to services. Basically, any consumption that we can think of, 80% of the consumption is going to come from the middle income class population, like ourselves. So when that is the theme that is expected to play out, what is it that we can bet on as individual investors? So again, to take a look at some of the key categories that we are focusing on, that could include something like transportation, food and beverage, education, entertainment, leisure facilities, and so on. Now, let us try to understand how we as investors can capitalize on a growth story like this. So if you as investors want to capitalize on how the middle income class population is growing, I want the users on this particular session, the audience who have tuned in, to basically just think for yourselves how you would basically try to invest in this growth story. Would you go ahead and invest in an index? Would you go ahead and invest in a momentum based stock? Or would you go ahead and invest in a set of sectors that you think is going to play out? Or will you be focusing on stocks which the middle income class population usually buys? Which one of these four options is it naturally going to be? So that is a question that I would like all of you to maybe think for yourselves. But I'm going to show you how maybe we can go ahead with that particular topic. So now at Smallcase, there is I hope all of you are already aware of Smallcases and what Smallcases are. So if you are not aware, small case, or what we also refer to as Kotak baskets, are basically direct equity portfolios wherein you are investing in an idea or a theme, and as a result of it, you're picking up this portfolio directly. And by investing in any small case portfolio, all these portfolio constituents become a part of your Kotak Securities account. So you in turn own these stocks as a portfolio. And the small case basket also, or what we call as Kotak baskets, are also flexible enough to undergo rebalances. What I mean by that is these portfolios are not static portfolios, they're dynamic portfolios. So with time, whenever changes need to be made, small case portfolios undergo these changes. So again, I'm assuming that in the audience today, we all know what a small case is. If not, you can maybe take part in coming up sessions where we will be talking about what small cases are, or you might even go online and search about small cases. So anyway, moving forward, how do we capitalize as investors in a growth story like this that is going to play out? So we have designed a small case which is specific to that particular requirement, which is called as the Great Indian Middle Class, where we are investing, or this portfolio is basically investing in companies which are preferred by the middle income class population. Let me try to explain with a couple of examples. So now, before we go and see what are the stocks that are a part of this particular portfolio and maybe its performances, we'll try to see what the Great Indian Middle Class is all about. So for example, as you can see on the screen, this is a basket of stocks which is poised to benefit out of the demand for goods and services being consumed by the middle income class population in India. And what are the set of sectors that this particular basket is investing in? So if you take a look at the overall composition of this particular basket, you will notice that one of the highest weightages is assigned to, for example, we have paints, we have automobiles, personal products, we have home electronics, departmental stores, household beverages, precious metals, and beverages. So now, if this is the segment composition, what could be the set of stocks inside each one of these sectors? So since I'm assuming that all of us belong to the middle income class population, including the audience today, I would like you to maybe try to recognize, when I head over to the next screen, I want you to try to recognize how many brands it is or how many companies it is that you recognize as a middle income class population. So when I head over to the next screen, I'll be showing you right over here. You can see the set of stocks that are a part of this particular portfolio. So when we talk about paints, we have Asian Paints, which we have all been customers at. Anybody who has built a house, we know that out of the limited amount of options that we have had, Asian Paints was preferred by most of the middle income class earners here. And similarly, when we come to automobiles, we have Bajaj Auto, Hero MotoCorp, and Maruti. And as you can see, these are three names that all of us as middle income class population can easily recognize. So Maruti is in the four-wheeler category in automobiles. And when we talk about two-wheelers, we have Bajaj Auto and Hero MotoCorp. And it doesn't matter whether the middle income class population recognizes it today. This is going to hold true for the middle income class population, not only today, but 10 years from today or 15 years from today. These brands will nevertheless have the same priorities or the same weightage. So now, coming to personal products, which is a category or a sector, we have made our investments, or this portfolio basically invests in Dabur India and Tata Consumer Products. And if you take a look at home electronics, we have Crompton Greaves. So most of us have Crompton Greaves fans fitted into our houses. And we have Orient Electric, and we also have Whirlpool. If we take a look at departmental stores, we have Avenue Supermarkets, Trent, and V-Mart Retail. So Avenue Supermarkets, for those of us who are not aware, is just D-Mart, nothing else. So again, these are all places where the middle income class population tends to flock for purchasing their goods and services. Similarly, when we take a look at automobiles, these three companies, it could be Bajaj, Hero MotoCorp, or Maruti Suzuki. This is a place where you neither find lower income population or the highest earning population in India. These companies cater only specifically to the middle income earners in India. So if we take a look at household products, Hindustan Unilever is a name that we are all aware of. You can head over to maybe your any FMCG products that you own, and out of every three products that you own, one is probably going to be a Hindustan Unilever product. And similarly, when we talk about watches or precious metals or jewelry, it could be Titan, which is preferred by again all of us. So it could be Titan watches, it could be their jewelry spin-off, it could be anything. And when it comes to beverages, we have Varun beverages. And if we as users, or if we as potential investors, if we want to understand the breakup of this particular portfolio, we have the breakup. But what in terms of weightage? So that is mentioned on the right side column. So for example, what this chart or what this data is showing you right now is that Asian Paints makes up about 6.57% of the portfolio. Bajaj Auto makes about 6.7% of the portfolio. Maruti Suzuki has 1/10 weightage in the portfolio, which is about 10%, and so on. So all this data has been mentioned here for your reference. So now, obviously, we want to understand as investors as to what the performance of these particular portfolios could be, right? So when we talk about performance, one thing that we'll have to understand is that these are long-term portfolios, which means that you will have to stay invested for a period of time for that theme to play out, for you to be able to see the higher alphas that are being generated. What do I mean by higher alphas? Higher performances being generated. So anyway, this portfolio has been live for quite some time on the platform. So I'll explain to you what you're able to see on the screen right now. So you're able to see two graphs. One is so this screenshot has been taken directly from the platform. So even if you head over to the platform today, you will be able to see the same performance metric. So if you take a look at the Great Indian middle income population specific theme Smallcase, so you will see that this is being represented by the blue line. And naturally, we have to compare this particular performance with something, correct? And what would we compare it with? Naturally, the Indian benchmark index. So here, since most of this particular portfolio is made up of large cap stocks, we are comparing it with the equity large cap index to see whether this portfolio has been able to generate higher returns, equal returns as the index, or lower returns as the index. So as you can see, this portfolio was launched in 2016. So if you head over to this particular area, you will see that this has been launched in the year 2016 and it has seen different cycles in the market. So it could be bullish phase that we have seen post-COVID. It could be the market crash of March 2020, where the markets have, the markets were quite bearish very soon. And we have also seen normal markets, which we encountered during the 2019 to 2020 phase. So basically, this portfolio has seen all the different market cycles that have been available. And how has it performed? So what this chart is showing you, this particular data is showing you, is the value of every 100 rupees that would have become this if you had invested 100 rupees in the beginning of this particular graph, whenever this portfolio went live. So here you can see the current value of 100, that is rupees 100, invested at the launch of the portfolio would be what? So for the Great Indian middle class, every 100 rupees you had invested in during the inception, that is the starting, would have become about 262 rupees, which means it's about a 162% return for us as investors. Similarly, if you had invested the same 100 in a large cap index, for example, Nifty 100, so that 100 rupees would have become rupees 222, which means that naturally the Great Indian middle class has given quite a higher performance compared to simply investing in the large cap index. So again, let me tell you that these themes are going to take more time to play out. For the alphas to be generated in a higher way, the closer we approach the dates on which we expect the middle income class population to increase, the higher alphas these portfolios will start giving. So time is of the essence when we sit on portfolios like this. So now, when we take a look at CAGR, what do I mean by CAGR? I mean compounded annual growth rate. So basically, it shows the average return that the portfolio is generating for its investor on a yearly basis. So some years it could be down, some years it could be up. But what is the average return that it's generating? So for this particular small case, the Great Indian Middle Class, this is somewhere around 21%. This is since the inception of the small case. It has been generating about 21% CAGR, whereas the large cap index has been generating about 13.26%, and FD has been giving investors about 6.52% return. This is an average of all the FD rates that are out there, including that which is being provided for senior citizens. And then we have an inflation rate of about 4.83%. So this is all about the middle income class small case that we have been able to design on the platform. So for those of you who wish to explore some themes like this, which are going to play out, where you specifically know the set of companies that you're investing in and the underlying philosophy behind how this portfolio has been designed, then you can migrate or you can head over to you can basically explore portfolios like this and see if it fits your investment requirement well. So to give you some more specific details about these particular baskets, so the first thing is with respect to the minimum investment amount. So every small case or every Kotak basket comes with a certain minimum investment amount, or what we call as a minimum ticket size. So for this portfolio, the ticket size starts at 74,564. So there is a reason why this ticket size exists. It is because of the number of stocks that we have seen in this particular portfolio. It will not be possible to allocate proper weightages to all these stocks and have a basket which is designed under 15,000 rupees. So because of the nature of the stocks that are present in this basket, the minimum ticket size becomes higher and higher. And right now, as of yesterday, the minimum investment amount is somewhere around 74,564. So what else do you need to know about this particular basket? It is rebalanced once in a quarter. Now, what do we mean by rebalance? So at some point of time, if the middle income class population stops preferring a particular brand, for example, I'm just going to give you a very random example here. This is not a correct example, but I'm going to try to make you understand when a rebalance will occur. So, for example, DMart is preferred by us as middle income class earners to be able to have discounted rates there. We prefer shopping there because of the discounted rates that we are able to get there. It could be offers, it could be whatever. But what if a scenario comes through wherein DMart is forced to increase their prices? Or what if a scenario comes wherein, let us say, Flipkart or Big Basket or Grofers or Blinkit, it could be Dunzo. What if they start matching the rates that are being offered by DMart? And the population soon migrates to online shopping rather than physically heading over to these DMart stores and shopping. So if that situation ever occurs, then it does not make sense for us to hold DMart as a part of this particular basket, correct? Because it is no longer preferred by middle income class population. So what if the middle income class population grows? That particular stock is not going to be a part of that journey. So that is when we need to remove that stock and we need to add another stock in its place. So this is just an example. So this process of removing unhealthy stocks, or I wouldn't call exactly unhealthy stocks, those stocks which are not fitting into the part of the philosophy of that portfolio, the process of removing those stocks and adding more stocks in its place, which are fitting into that criteria, is called as a rebalance. And in order to keep the portfolio healthy over the next, it could be 1 year, 2 years, 5 years, 10 years, we need to make sure that the portfolio is getting rebalanced as and when needed. So every basket, Kotak basket, or every small case that has been designed goes through this process of a rebalance. And when is the rebalance scheduled? Is it scheduled randomly as and when required? No. So whoever has designed these particular baskets, that is the SEBI registered fund manager who has designed this particular basket, will give out dates on which, specific dates on which they will be reviewing that particular portfolio. And they will be letting users or investors know if the portfolio needs to be rebalanced or if it can continue as it is. So that specific date during which that shuffling can occur is called as a rebalance date or is called as a review date. So this portfolio is rebalanced once in a quarter, which means that this portfolio is taken a look at, it is reviewed by the whoever is the SEBI registered manager who has designed it. That particular company or that particular entity and its research analysts will be taking a look at each one of these stocks and will be figuring out whether they fit into the criteria. If they fit in, well and good. If all the stocks fit in, well and good, it can continue. If one stock is no longer fitting in or should not be a part of this portfolio, that will be removed and a new stock can be added in its place. So this last happened on March 16th, 2022, which was about just last month. And the next review is happening on July 16th, 2022. So what I mean to say is that this portfolio is being reviewed by the analysts once in a quarter. And whenever changes need to be made, they will be made. So after July 16, 2022, when will the next review be? It will be exactly 1 quarter after that. So exactly 3 months after that. So this is all about the great Indian middle class small case that we have designed or the portfolio that we have designed. And so far, our investors who have invested in this particular basket have been loving it, and the feedback has been quite good. So moving forward, there is one more theme that we want to focus on in today's session, and this theme has something to do with the rural demand or the rural population in India. So this is going to be the next Indian growth story. So let us take a look at the rising rural demand in India. What do we mean by this? What do we mean by the rising rural demand in India? So now, first, let us take a look at just the rural demand in India and how it is playing out compared to the demand that is coming from urban India. So if we take a look at maybe anything lower than tier 3 cities, if we take a look at how the consumption story specifically is playing out, consumption could mean consumption for goods, consumption for services, it could be anything. But if we take a look at consumption in rural India, it is growing at a 50% higher rate than what is happening in urban India. That's a very huge difference. And that 1.5x growth rate can have a compounding effect in the long run. So, and we also know that the Indian government has been taking quite a lot of steps in that particular area to boost demand in rural India and to basically address the issues that the rural Indian population is facing. So as a part of the budget 2022, the total outlay towards major agriculture and rural development projects as of today stands at about 2 lakh crores. Moving forward, let us take a look at some other data and we'll be able to understand where the government has prioritized what. So under the minimum support price, that is the MSP route, approximately 2.3 lakh crores will be dispersed to 163 lakh farmer accounts directly. And apart from this, the budget has also introduced the concept of Kisan drones that is going to facilitate the land record digitalization and efficient crop management. So this is something that we are yet to see happening on a major scale. But going forward, this is something that the government has prioritized. Apart from this, if we take a look at the irrigation benefit project, that is the Ken Betwa project, an estimated allocation of 44,000 crores to cover 9 lakh hectares of farmer land is going to be implemented. And if we think of how we can play a part or we can partake in the growth story that is happening in rural India, And if we want to take a maybe step towards capitalizing on the 50% extra growth that is happening in rural India as compared to urban India, what we have done is we have also designed a small case that reflects such kind of an idea or that particular idea. And this small case is called as rising rural demand. Now, let us take a look at, let us just explore what this small case does or what this basket does. So, this is a basket of stocks in which we invest in companies that either derive a significant amount of their revenue from rural India or are striving to enhance their foothold across rural markets to benefit from increasing rural demand. So, now I think that this is self explanatory. Moving forward, what are the sectors that this particular basket is investing in? So, if we take a look at the largest holding in this particular basket, that is going to be building products. And moving forward from building products, we have home electronics and we have seeds and fertilizers. And if we take a look at just these three sectors, building products, home electronics, and seeds and fertilizers, that accounts for more than 50% of the basket. And the rest are all fragmented sectors. So it could be something like consumer finance, FMCG, two wheelers, it could be tobacco, tractors, insurance, and beverages. So now let us take a look at the stocks that are present in this particular basket. So if we take a look at the stocks and segments under building products, we have Ambuja Cements. Then these are names. Some of these names are names which we would have heard as middle income earners in India. But many of these names will be more prevalent as we head over to the rural sector consumption, or we start focusing on how what brands the rural population in India consumes. So if we take a look at building products, two names that we can probably recognize is Ambuja Cements and we have Supreme Industries. And in home electronics, again, I believe we can recognize all the three names, that is Bajaj Electricals, Crompton Greaves, and Orient Electric. And in seeds and fertilizers, again, which is a major part of this portfolio, we have Rallis India, we have Dhanuka Agritech, we have Coromandel, and so on. And if we take a look at consumer finance, we have Muthoot Finance and Cholamandalam. Again, these both brands, according to surveys, have been preferred in rural India. And we have FMCG and all the other sectors also that are out there. So this particular basket is quite diversified. So the number of stocks it has is quite huge to be fit into one particular screen. So what we have basically tried to show in one single glance is the top set of stocks and sectors in this particular portfolio. But nevertheless, this is not the whole portfolio. You can use your Kotak Securities account, log into the platform, search for rising rural demand, and you'll be able to see the list of all the set of stocks and sectors that are a part of this particular portfolio. So now, moving towards how this particular portfolio's performance has been so far. So if we take a look at the portfolio's absolute performance, so again, we can see here that it has so far, at least for the time being, mirrored the equity multi-cap. It has managed to slightly outperform the equity multi-cap index, but more or less it has been able to just mirror it so far. And the portfolio has managed to generate higher alphas in the year 2017, 2018, 2019, and even during the bull run. But this is for these kind of things to play out. Like I've said, even for the previous portfolio, this is a very long-term play. So the minimum vision should be somewhere around 10 years, 15 years, and so on for these kind of themes to actually play out and for the benefit to be derived for those particular stocks, for the market to recognize the benefit that has been derived, and for the demand for these kind of stocks to grow up, which in turn makes the portfolio go up. So it is a lengthy process, and we'll have to play our part in being patient for these particular portfolios to play out in the long run. So one question that I constantly get is whether these portfolios include its dividends performance. So no. So all these are simply price movements and the capital gains performance only. So dividends is an additional income that gets generated, and dividend again comes to by holding rising rural demand or middle income class population. You will be receiving probably the dividend yields have been mentioned on the portal. So it could be somewhere around 1%. So that is something that you will receive directly to your bank account. And that is not, that calculation, extra income is not a part of this particular portfolio's, price performance. So if we take a look at how the portfolio has performed since its inception or since when the strategy was conceptualized, again, here we can see that this particular portfolio again has about a 21% CAGR and against an equity benchmark return of about 13.26%, FD of 6.5 and inflation of 4.8%. So now, what else do we know about these particular baskets? So some of the more important details is you can start your investment with about 41,000 rupees. So this is as of yesterday. So why am I saying as of yesterday? Because these particular amounts, they can change with the market condition. So today, if it is 41,597, tomorrow it can vary slightly depending on the portfolio's performance. So if this particular portfolio goes up by 1% by tomorrow, then the price of then the minimum investment amount also goes up by 1%. And similarly, if it falls by 1%, the minimum investment amount can fall by 1%. So these portfolios, the minimum investment amount keep changing with time. But as of yesterday, it is about 41,597. This is what you need to start your investment journey. And now, again, when we talk about this particular basket gets rebalanced or reviewed once in a quarter. Again, there is no change from how the middle income class population basket was doing versus rising rural demand basket is doing. So over here, rebalanced once in a quarter. Last rebalance happened on March 16, 2022. Next rebalance happening in July 16, 2022. And now, why invest in these kind of baskets using Smallcases? Why not just go ahead and take a look at these stocks and simply invest in them directly? So some of the benefits is that you don't have to go and do all those extra steps by yourself, because investing in a Smallcase basket using your Kotak account is as simple as 1, 2, 3. There are no additional steps to be followed. You just have to log into the platform, log into the Smallcase platform, and using your KSL trading and demat account credentials. Once you have logged in, you can pick the Smallcase of your choice. You can click on invest and you can simply proceed. And whatever is the investment amount that is required needs to be present in your Kotak Securities trading and demat account. So it should be a part of your securities account. If that amount is present there, then that amount will be debited, used to purchase all these stocks or the Smallcase, and all these stocks will come and become a part of your portfolio. So you will be owning all these stocks because they will come to your Kotak Securities trading and demat account. So now, to compare or to just specify some advantages, it's again integrated with your existing broker account. Like I said, no new account opening process. The money is debited from your trading account, stocks are delivered to your demat account, and whenever dividends are paid to your linked bank account, the dividends will be paid. So there is literally no difference between just going and buying a stock by yourself or investing through Smallcase as a platform. And when you invest in a portfolio, when you invest in a Smallcase or a Kotak basket, what basically happens is you partake in one of the most important features of the platform, which is the ability for the portfolio to rebalance. So rebalance is what keeps a portfolio healthy. And if you buy, even let us say you log into this platform and you invest in the Smallcase, is the portfolio, would you like the portfolio to be the same set of baskets 2 years from today, 5 years, 10 years from today? So no, it doesn't make sense, because some of these stocks have to be removed over a period of time. So that process of removal of unwanted stocks or stocks which have played out its themes, and to be able to replace it with stocks which are expected to perform better or stocks which are fitting into the criteria better, is called as a rebalance. And that is enabled only when you invest in a product like Smallcase or in a product like Kotak basket. So it's any which ways a hassle-free investing experience. So I believe that you should be exploring that. So anyway, with that said, I would like to conclude this particular webinar. Thanks a lot for tuning into this particular session. and taking your time out and trying to understand how these particular themes are playing out. So, for those of you who have any queries, I would encourage you to start posting that in the chat box or in the questions box that has been provided to you. And I will take up all the relevant questions that are being asked there right away. So, this is the forum to ask your questions. Feel free to ask your questions. And it doesn't matter whether it's a small question or a big question, please feel free to go ahead with it. So the first question is it the right time to exit some of the large caps in order to invest in small caps? Again, this is not a theme, Ahmed. You should not be focusing on large cap investing or small cap investing, because that is something that you will not be able to understand or speculate. What you should be doing instead is focus on some theme which is playing out. Try to find out if that theme fits your criteria. This is again for investments. For trading, there is nothing that can be done. But if you want to become an investor, you need to focus on which theme you would like to participate in. Uh, you'll have to try to figure out how this theme has performed in different market conditions. Has it performed bullish, or has it performed really well in good market conditions? Has it performed not so well in bearish market conditions? And based on that underlying assumption, you'll have to decide on how you want to go about your investments. So I see that many questions are coming up about individual stocks. So again, this session is not about individual stocks. I'm not an advisor to give you advice on what you should be doing with your holding statement or what the take profit or stop loss of a certain stock is going to be, because that is something that nobody will be able to tell you accurately. Again, for those of you who are inquiring about individual stocks, that is out of purview of this particular session. So the next question is how to invest in small cases. So that's a fair question. So what happens is, for you to be able to invest in a small case, you need to first have, if you're a Kotak client, ensure that your account is active. That is, your Kotak Securities Trading and Demat account is active. Once you have ensured that, head over to the platform. You can head over to kotaksecurities.com and click on basket investing there, or you can click on basket investing. In bracket you'll find small cases listed there under value added services. So click on that, enter, use your own credentials to log in, and try to figure out which small case basket you want to invest in. Click on that particular small case, click on invest now, proceed with the step-by-step process, and you'll be able to invest. An alternative to that is to simply reach out to the assigned dealer. So you will have an assigned dealer being a part of Kotak Securities. Since you have your account there, a dedicated relationship manager and a dedicated dealer is something that will be assigned to you. If you do not have the contact details of those particular people, what you can do is reach out to Kotak Securities customer care, and they will be taking your trading code from you, and they'll be assigning a dealer and an RM to you, and they will be able to guide you better on how to go about investing in them, and they will also be able to place the orders from there and after taking your consent. So I would request you, sir, to reach out to Kotak Securities. So the next question is, has the income levels indexed or adjusted for inflation? So these are absolute numbers. I do not know what you mean by income levels. Prasad, if you're talking about the price appreciation is absolute and it is not inflation adjusted. So the next question is from Shivram, who asks, is this an algorithm based portfolio? No. So these portfolios are designed by human beings. So they are designed by SEBI registered professionals. This is not an algo based pick. There will be a team of, for example, both the portfolios have been designed by an entity called Windmill Capital, where there are about 7 analysts who sit together and decide what needs to be taken in and out. So no, it's not an algo based portfolio. It's a human designed portfolio. So the next question is Kuber basket is how well curated and what are the expected gains? So Ankur, again, I believe Kuber basket is something that we had covered 2 weeks ago in a different session. So since that basket is not a part of this session, I will not be taking it up. The performance is something that you will be able to see on the platform directly. And if you wish to invest in Kuber basket, feel free to reach out to your RM at Kotak and they'll be able to guide you better. It is just that since I've not covered Kuber basket in this session, I will not be able to elaborate on it. So again, for those of you who are inquiring the brokerage structure in Kotak, your RM is your point of contact. They'll be able to guide you better with this. So the next question is, what is the expense ratio? So that's a great question. So expense ratio is almost nothing. So in these kind of portfolios, these are free access portfolios, which means that you as investors or potential investors, you can invest in these baskets by paying just 100 rupees plus GST fee, which is 18 rupees GST. So 118 is a flat fee that you have to pay to invest. Whether you are investing 5,000, 50,000, 5 lakhs, 10 lakhs, 15 lakhs, it really doesn't matter. You will incur just 100 rupees plus GST. So a flat fee of 118 to invest in these particular portfolios. Apart from that, you might incur brokerage, but nothing more than that. So money is directly credited or debited, as in case maybe directly linked to our Kotak bank account. It's debited from the Kotak securities account. So because these are all securities, these are all stocks. So they need to come to your, they have to come back to your securities account. Since that is the case, it will be debited. The money to buy these securities will be debited from your Kotak securities account itself. There will be nothing that will be debited from the bank account. So are there any costs other than brokerage for small case investing? I think this I have clarified. It is 100 rupees plus GST. Returns KEGAR are with or without considering any costs on the small case. So there are no costs, like I've said, Rajesh. It is going to be 100 rupees plus GST. So if you're investing 10,000 rupees, 100 rupees might be a certain expense ratio. It could be, for example, a 0.1% expense ratio. For example, a 1% expense ratio. If you're investing 1 lakh, then it becomes a 0.1% expense ratio. If you're investing 5 lakhs, then expense ratio is close to 0 and so on. So expense ratio is something that depends on how much you want to invest, since you're paying a flat 100 rupees plus GST fee. Okay, so the next question is from Vamshi, who asks, will the small case stocks appear in the Kotak Securities holdings? Yes, it will. And how to exit? So to exit, you can come to the small case platform. If you decide to exit the small case someday, you can click on exit small case and click on OK. Once you do that, all the stocks will be sold. All the stocks means all the stocks that are part of this particular small case will get sold from your Kotak Securities account. So it will no longer be a part of the holding statement. So the next question is from Thomas. I joined the meeting late. Can you name the basket which is valued at 41,000? It's rising rural demand. So every month, should the client deposit amount in trading account prior to every month SIP? So Thomas, so there are two ways of investing. One is through SIPs, one is through lump sum. So if you invest through lump sum, it's a one-time investment. You can just continue. There is no requirement of setting up an SIP. If you have indeed set up an SIP, then yes, in your trading and demat account, funds should be available prior to the SIP date. Otherwise, the SIP will not happen. You will get a notification saying that the SIP failed because there were no funds to debit. But at that point of time, you can put in the funds and you can manually finish your SIP. So there is a provision to manually finish also. So if the auto debit for the SIP doesn't work, you will be notified. So is this portfolio based on performance history? So I do not understand that question. I think that performances of both these portfolios is something that has been displayed, and you can also head over to the platform right now and check it out. So how to exit? I think this has been covered. In an SIP, will 100 be charged? No, absolutely not. So this is something I forgot to tell you. The 100 rupees plus GST is a one-time fee only at the time of making your first investment only. After that, in the same basket, it doesn't matter if you invest 10 times, or it doesn't matter if you've set an SIP for the next 30 months and the SIP continuously keeps happening, you will not be charged 100 rupees again for whatever may be the reason. Even when you exit, you will not be charged. This is just a one time 100 rupees plus GST fee, which is called as an execution fee that we charge. It is not a portfolio management fee. Suppose any customer investing 1 lakh and it has gained to 1 lakh 25,000. Can he sell partially or full? Why would you want to sell? So the idea is that you either hold the portfolio or you exit the portfolio as a whole and move on to a portfolio that you like. So making a partial exit does not make any sense. I would say that instead of a partial exit, you keep adding more in the form of SIPs. And that is the way to build your wealth. The way to build your wealth is not to be able to partially exit the portfolio when you see a profit. That is a trading mindset which does not work in the investing space. So over here, rather than selling, we buy more, irrespective of whether the portfolio is going up or down as of this moment, because we know what will happen in the long run. So, irrespective of what is happening in the outer scenario, we keep buying. So, that is the process to be followed. So, can you tell me the process for investment? So, can we sell some few stocks of the basket? How to sell the basket, and which is rebalanced regularly? So, since you are asking for this to be shown over here, we are actually running short of time. So, what I'm going to do right now is, or I can tell you one thing, Rajesh, since what you can do is just head over to YouTube, and over there, you can search for how to make a small case investment. And over there, you'll be able to see how the investment process works, because there are many influencers who have covered it. Smallcase's own YouTube channel covers that particular information. So if you're not getting any external help, I'm sure that YouTube will be able to help you out there. And since we are running short of time, we might have to conclude this session, quite quickly. Is the SIP amount needs to be a multiple of the minimum investment amount of the small case? Not necessarily. So the SIP amount can be less also. So if a portfolio has about, let us say, 40,000 of minimum investment amount, then the SIP can start from even 10,000 onwards. So, or sometimes in many cases, if the portfolio has 30,000 of ticket size, then the SIP can also be 30,000. So it really depends on which small case you're talking about. So if you can either reach out to the Kotak help desk, or you can even reach out to help@smallcase.com if you specifically want to know the SIP amount for that particular small case. Or you can open the chat box and just chat over there. So we'll be able to tell you what the SIP amount is. But if you want to invest and if you figure out the process to do that, Kotak RM is the place to reach out to, and the RM will be able to guide you better on that. So with that said, I think that all the questions which have been asked on the forum have been covered. So thanks a lot, everyone, for taking your time out and coming over to this particular session. I'd hope to see all of you going forward in a future session, and probably interact with you again going forward. So thanks a lot, everyone, for tuning in.